What's up, what's up, what's up, everyone? All right, here we go. All right, everyone. One sec. Let everybody to get here. All right, we're gonna have fun today. We're gonna have NFP in about 6 minutes. Some banks estimate lower number, so remember, if it's lower, most likely stocks will rock and roll higher. I mean, they are going up pretty high. Let everybody get here. Let me see the questions. All right. One of the mods will be pasting me the questions, the people who ask it. Anyway, so let's see what's happening. One sec. Let me adjust this a little bit. There we go. Better. All right. So, as you can see, yesterday I was long during live, explaining why I was long, blah blah blah, all this bullshit, inverted head and shoulders and all that nonsense. Obviously, it played out. I closed yesterday in the evening around this resistance. Okay. Obviously, it's still ongoing, but I didn't want to babysit through the night because it was already. I went to bed, and this easily could have reversed. It climbed a little higher, so be it. So now essentially, this is NASDAQ. We are hitting this top resistance, right? So if we, depending on the news, we're either gonna fly or we're gonna create, obviously, a deep pullback, which will allow me to go long one more time, probably. Again, let's see what the print says, because even if it's in line, I think, because the expectation is so low that it will still go. Even if we get a pullback, it's going to be probably a gift to go long. All right. Oh shit! Calendar. Fucking calendar. There we go. No more calendar. All right. Let me go back. So this was trade yesterday. The inverted head and shoulders. We're along here. And I closed it at this resistance last night because I didn't want to babysit it through the night. And when London opened here, it could have easily reversed, right? So I just closed it, booked the profit, and that's that. Also had the pound from, I don't know, when was this? Wednesday. Yeah, so I just closed it about an hour ago or so at 74. So a little lower than here. Well, pretty much this level, because I didn't want to, again, prior to the news, I don't know if it's going to go here or here. So I have to close the position because I was in profit. Another option would have been taking half and break even, but I don't want to risk it. I just booked it. I can rejoin the party later. All right. So these were my 2 trades. I had 5 trades overall this week, all winners. Yeah. One sec. Didn't trade gold because gold hasn't done. As you can see now, we had a very nice pullback and a very anemic rise. So this usually looks like this. You have an impulsive move, a corrective move, which is choppy, and another impulse. So an ABC correction in L8 wave terms. Okay. So again, I want to catch this fucking thing here. There's a daily ATR with the confluence of previous all-time highs. All right. So basically, that's a good confluence to get long. Again, I'm not just going to leave an order there, and depending on the news. But if we get our reversal patterns around these levels, I will obviously consider going long. Now, all that said and done, remember, today is Friday, and on Friday, usually it's a profit-taking day. Okay, so you shouldn't. If you've been trading less than a year, you should stay away today. Okay, I know it's exciting. I know there's going to be a lot of action, but you're not in the casino. All right. If you want to go to the casino, go to the casino. At least you're going to get free drinks, as I always say. There's no point. I mean, unless there is a very, very A++ setup, don't just get in, because markets are tricky on NFP. And what do I mean by tricky? Because essentially what you have is a three-prong move. All right, you have the initial reaction. Let's say it goes whatever the news are. Right, it goes up. That's driven by algos in a matter of seconds, less than a second. Okay, by the time you even hear the number that came out, you're gonna see the price move already, because then the bots got the data before you and they already traded it. And there we go. Oh, the numbers are coming out. There you go. See, this is pre-run. Okay, 22,000. Okay, this is gonna rock and roll. Nasdaq is gonna. See, this is the initial reaction. You're gonna get the initial bullshit reaction because it's bad economy, but then you're gonna see a turnaround later today, most likely. Wow. Unemployment going up. Okay, excellent. All right, so now we have to wait for some interesting levels to get our positions in. Okay, I mean, gun to my head. Now look at this shit just flying. Yeah, dollar is in the shitter because now everybody knows that the Fed is going to be cutting. So you get this initial reaction. You're going to have the algos taking profit, and that's when you will allow, using that pullback, you will be able to enter into the direction of the trend. But this is such a bad number. This thing can just keep fucking rocking. Oh man. Wow. We already did the normal range for euro and above it, right? This is the normal range. Obviously, it's not a normal day, so it's going beyond. This is nice. All right. So obviously, fundamentally, I've been ad nauseumly fucking explaining as to why this move is happening the way it's happening, and hopefully, if you are attending these webinars not just for some free shit, like some idiots were listening, this will allow you to actually become a profitable, self-sustainable human being. Okay. If you like free shit, get free toasters and free T-shirts. So be it, and you'll be getting that free shit all your life. But you know, I like to afford my own shit. Okay. All right. Gold all-time highs done. Boom. Yeah. So everything is gonna go up. I want to wait for a momentary. You see again in the Nasdaq and the stocks. See, initial reaction, profit taking, and now you're gonna get a real move within the next hour. I mean, one sec. Think about it. This is looking very juicy. All of this is looking very juicy. By the way, you want to see something interesting? Where we got the initial reaction from, right? This is where I closed the price. So look how at 7:02 exactly you had a turnaround candle, right? And you get a 1-to-1 if you wanted to. Anyway, that's why I closed it. But prior to the news, look how it respects the fibs. And if you've been watching the series, you know how I like my deep pullbacks and and how well they work. So, all right. So now we've closed all these inefficiencies. I think it's pretty obvious that the dollar should be continuing going down. Chasing up here is a gamble. If you want to chase it with one fifth of the size. If you really want to chase, because this. But we are already like at the pretty big levels. So I would wait for a little bit of at least in the 15 minutes, some kind of pullback, something, because you know you have RSI already pushing 80. You know, in 15 minute, in 5 minutes it's already it's 83, 84, whatever the fuck it is, 85. it's a little overbought to say the least. So the algos will take profit. Somewhere in this area you'll be able to get long if you want to get long. All right. See, anyway, don't chase, never chase. We always wait. And again, next week you're gonna have plenty of opportunities because now you know the Fed will definitely cut. So the path is where to the fucking for the lower dollar for the rate cut. If the dollar is lower, just pick your entry points, like a G, as they say. And that's it, and just go in the direction of the fundamental flow. Once you understand the fundamental flow, you don't need to be fucking genius to, you can enter. It doesn't matter where you enter, here, or here, you still make money. Even if you have a shitty even if I enter, I can trade this, I can go long now, and in 5 days I'll be in profit if I need to, okay? But I don't want to, that's a stupid way of trading. I'm just saying I can trade out of it, even if out of a bad entry, I can trade out of it correctly. It will just take agony and, it's a stupid way of doing it. By the way, how nice is that? 786, boom, to the dot. Deep pullbacks, baby. We don't need this anymore. Clean. You also don't want to have a lot of shit on your charts, right? So, by the way, look how this is repeating this. This is a weekly chart, right? Boom, boom, boom. You had the breakout that's happening now. Oh, what is this? Is this a fucking retest? Oh my goodness. So the Jerkovs who were chasing up here then had to sit through all that pain. Meanwhile, people who are patient, professionals, they just grabbed the price here and rode it up, and we were long euro for a while, right? So this is why I'm not chasing up here. It can go up. It can also be a fake out and turn around. You never know. So, but you will always, not always, but you will get no matter how far it rallies, you will get a pullback eventually. Okay, and that's when you're gonna go and make make a killing. But you have to be patient for these opportunities because we trade A setups, and you guys just because it's a Friday. I must trade. I have to trade. I have to fucking whatever the fuck mentality is in your head of doing whatever. You're not a factory worker anymore. Okay, so stop thinking like one. You're not in the factory churning out fucking iPhones or cars or being an office monkey filling out useless dickhead fucking paperwork. Right? So we hunt here for only proper A setups. All right, and you can see it's not exactly it's at these levels. So you're gonna get some kind of pullback, and that's when we're gonna strike. All right. I did 5 trades this week. All 5 are winners. It's 100% motherfucking accuracy. Meanwhile, somebody took 50 trades, and it's all fucking plus, minus up. They had bloodshot eyes and all that jazz. The usual bullshit that comes with doing too much, and you're just spinning wheels in one place, generating fees for the brokerage. That's all you're doing. All right, so I'm patient. I'll wait for a pullback. And because we know the direction, and that's the best, that's the fucking insight. Where is the direction? You have alignment of technical analysis, alignment with fundamentals. That's the strongest fucking trade you can take when both of them are pointing in the same direction. You just have to, you can literally buy right now, and in 2 days you will be in a profit. But again, that's a gamble, and we don't gamble here because we have to act like a professional, and being a professional is discipline. Because if you're gonna lack discipline, this time around you're gonna chase and you're gonna make money because it's the probability is high that it's gonna keep on going higher. However, you will teach yourself a bad habit. And once you teach that bad habit, it's very hard to get rid of bad habits, as you all fucking know. Right? So I want to remove my feed a little bit. So if you have bad habits, you eventually it will cost you money, and it will take you 6 months to a year to realize that you're losing money on these trades, and then only then you will start working fixing it. Okay, so why don't you just do yourself a favor and not do bad stupid shit? Okay. All right, let's see. That's it. That's the whole. I've explained to you why these moves were happening all of the fucking week, since last week, or for 2 weeks already. I've been giving you direction of every single day, and how to enter, or at least when you're not on the live, how to enter by yourself. And that's it. I mean, if you listen, you listen. Because I'm not gonna be doing these things forever. This takes way too much fucking effort, and it takes a lot of my time. I don't need this. You need this, or you don't. I don't give a shit, honestly. That's your journey. I'm not gonna be the one worrying about it. All right. All this old shit. So it's very nice to always have clean charts, because this features NQ chart. You obviously have a nice V-shaped recovery. V-shaped recovery can keep on going, but often there's also a little bit of a pullback. It creates a inverted head, shoulder, and then it keeps going. All right. So this is why I'm not chasing anything. I'll let others experiment, and you can see that the initial reaction down, then the up. So why does that happen? It happens because you have people who are trading 5-minute charts. So their stop loss is here, and their stop losses are here or here. They're super smart. Okay. So what the algos do? They do the initial reaction, then they drive the price the opposite way to step out, because a lot of other algos, a lot of other professionals thought, okay, shitty number, bad economy, price should go down. Where did they put? And they started selling here, sell here, sell here. Yes, it's going down. It's going down. Where were the stop losses? Obviously at the swing high. So what smart money does, what market makers do, and professional traders know, is this is the first move, the fake out, then they step out, the morons who FOMO in, right? And this is them being stopped out, and then those because this is why you get this pullback now, because the algos that drove this price up to step out these idiots who jumped on the short is now it's over. So now you're getting a profit taken by the algos, and now when the stocks open at 9:30, within the next hour or two, you're actually going to get a real move wherever it's going to be. Okay. So you always have to kind of you don't have to, but this is you can granularly dissect every bar on the chart and understand. So looking at this, it has to tell you a story, right? This is a story of how people are trading in their heads. So you need to be in the heads of other people, of other traders. All right. So this is retest for now. So let's see how we do. All right. See, again, just because there is a reversal candle, this is why people say, but whatever, it's not about reversal candles. It's why things happen at certain levels, and just because this is a reversal candle, I'm not going to be a seller, and et cetera, et cetera, et cetera, right? I am trading with, you have to understand the fundamental flow first, and then use technical that confirms it. Just because there is a pattern on a chart and you don't understand which way market is positioned and why, that's why you lose. That's why your system doesn't work. That's why you have 50-50 accuracy at best, and you just gambling, okay? So just because somebody showed you highlights on YouTube of their trading style, it doesn't mean it's a complete picture, okay? Just because you see some technical mumbo jumbo, there's a pricing efficiency, and this is a BC, and this is a CB, and I'm Michael, and I'm the greatest trader ever. You know, the ICT fucking idiot. He's not an idiot. He has very useful information, but he's fake, right? We all know that it doesn't matter. It's not about the technical. It's about a complete picture. You have to understand that the technicals don't move the market. There are fundamental huge flows of money going one way or another, trillions of dollars exchanging hands, and once you understand which way the flow is going, you use technical just to get a better price for it. But you need to understand the big macro picture first, and that takes a little while. You have to understand what's happening in China, what's happening in Australia, how they're in the United States, Europe, this, that, and you put these pieces of puzzle together. How interest rates are, how interest rate differentials are playing into the equation. Okay, what's an interest rate differential, right? Again, if Europe is offering you $10 on your savings, just to make it simple, and the United States is offering you 0, the value of euro is going to go up, because you're going to sell dollars and buy euros to buy their debt. And if it's the same amount of money, you get more yield on it, right? So if you have $100 to invest, would you invest it at 10% or 0%? Correct. So make it simple for yourself. When you start looking at all this macroeconomic shit, it might look complicated, but it's not complicated if you distill it to its first form, as they say in tech world, right? The essence, right? The simple principles. Because what is like national debt and all this? Imagine you have a credit card, and you're making $50,000, but your credit card debt is $100,000. Whatever, make these analogies for yourself, and you will once you start treating these numbers, instead of looking, America has 3 trillion, quadrillion, bazillion, remove some zeros, make it $3,000. Now it's fucking, all of a sudden you get the point, right? All right. Let's see. See, chasers are now sweating, and what are we gonna do? Let's do this. This is gonna be a nice buy order right here around these levels. So you have confluence of previous breakout, right? If you have we're gonna start seeing, it's a 5-minute fucking chart that I never trade. But if you start seeing this candle here with a follow through, you put your stop loss here, target the highs, there's 1-to-1. All right, and the impatient people are now suffering. The ones who bought here, here, and here. They're underwater. They're sweating now. That's why you wait, because you always get the initial reaction, and then profit taken, and then a real move. All right. The U.S. session is just starting, so for you to there's no rush. You'll get your trade. All right. All right. Let's see. One sec. I'm gonna post some in the channels. One sec. All right. When in an uptrend, does the price always come down to the previous lower low high that created a higher high to sweep liquidity so that it can continue to vice versa in downtrend? Not always, but often enough for you to take advantage of that pattern. It doesn't retest every single time. Sometimes it just keeps on going and going, right? But it retests enough time for you to take advantage of the situation. All right, I'm just reading some questions. Let me see if this works. Wait, let me see. Let me fix this. Fix this. Fix this. All right. Let's see. Let me see some questions. Yeah, there we go. There we go. Where's this thing? Oops. All right. So this was the question I just answered. All right. Do you think the initial reaction would turn less? I mean, very rarely. You always have the initial, again, this is a very lopsided news, so yes, it can last. But usually you get a fake out, you get the reaction, news reaction, news bots hit the price action. Then you get the algos that push the price the opposite way to stop out the breakout traders, the FOMOers. And only then you get a reaction. That's usually, again, that's a rule of thumb. I'm not saying it happens every single time, but this is something you have to be aware of so you don't get caught at 80% of the time, okay? And you don't sit in the upside down shitty trade because of it. So, with that said, yeah, sometimes reactions last all day because it's just a lopsided information. So the market has to overcorrect and price in the new information that is way outside what are the equilibrium of previous information, right? So that's why. What is the single best risk management lesson you've learned in your career and how I can apply it early? My risk management, I prefer to have, I close my, for example, I don't like being taken for a ride by liquidity grabs. So in the normal day trading, not in a news type of environment like right now, I usually use soft stop losses. What's a soft stop loss? One sec. One sec. My EDE is kicking in. All right. What's a soft stop loss? So I only close when there is actually not a wick into the price area, but when there is actual a close of a candle in the area. Okay, so you don't get wicked out needlessly, right? Let me give you an example. Sometimes when it's in a strong trending market, you don't even need to use that. But so basically, the problem is you can't use this as a new trader because you need hard stop losses because you don't have the discipline to close your trade. Because once you start seeing the price is running away, you're gonna shit your pants and you're gonna keep the bag of shit forever. All right, most of you don't have the discipline. That's why you have to have hard stop losses. My stop loss is usually I have a stop in. Let's say I have a stop loss in this area. Unless I see a candle close in this below this area, and all I see is just a wick. The wick doesn't mean shit. It's just a liquidity grab. So I don't want to be part of it. So I'm not gonna stop out there. Sometimes though that means your stop loss will be lower. That's fine. But because I avoid 80% of liquidity grabs, again, my percentage of winning is stupid high, all right? And I prefer that way, So I like to be right just like everybody else because I've been taught in the same fucking stupid schools as you were that the right is right, right? So It's just a handicap in reality that I mitigate via my 20 years of trading, with mitigated with trickery, right? But yeah, you should use, for now you should use stop losses. What I would recommend is, though, if you think your stop loss should be here, you should probably put it here. Okay, I'm just saying, right? So usually, I would rather trade half the position with a wider stop loss. I prefer wider stop losses. Some people like super tight stop losses. They get stepped out 70% of the time, and then on the other 30%, they get 1 to 5, 1 to 6 trades. That's their style of trading, and God bless them. So they get like mini cut, mini cut, mini cut, mini cut, mini cut, mini cut, big win. My shit is usually 1 to 1, 1 to 1.5 max. I don't do more than that, because I have plenty of other opportunities, and the less I stay in the market, the less chances are of some shenanigans happening and stopping me out completely. So I wanna de-risk as soon as possible, because there's always other trades to come. There's, again, 5 trades, 6 trades, whatever I took this week, made me all winners, all made me money. So why? I don't. For me, it doesn't matter. I don't need to juice everything out. That's how I control my greed. If I get greedy, all I do is I take half off at whatever level I want and put the stop at break even. All right, so I always want to de-risk as soon as humanly fucking possible. Not when it's just 1 pip above. When the price moves away, you're in profit. You take a little off the table, and then it's either keeps on running or not. So this way I don't have to, even if it stops out. I'm de-risked from the market. Okay, I'm not gonna lose any money, and that's it. And why would I do that? Very simply, because the first rule of trading is what? Don't lose money. And the second rule is what? See rule number 1, right? So that's Warren Buffett's phrase about investing. So that's pretty much how I look at all this shit. All right, let's see what else we have. Shit, I was looking at the questions. All right. How to adapt to constant change in market conditions. I mean, that's what trading is all about. How to adapt. It's you have to understand that's why everybody watches the fundamental news releases, because that's new information that is brought into the market, and markets have to adjust to that information, and then now you have to gauge the adjustment, and that's what trading is, right? So you capture the volatility. The volatility happens because new information enters the markets, and the previous equilibrium is not an equilibrium anymore. So the pricing needs to adjust to reflect that new information. All right, so that's the whole fucking point of trading. Is higher RR better or lower? I like I said, I've already mentioned, I don't do high or risk to reward, because I prefer wide stop losses, and and because I don't want to be bothered by being stopped out 15 fucking times before the fucking thing takes off, right? I'd rather just put the stop loss far away, and it only gets hit when there's their fundamental shift in the structure. That's when I'm wrong. Most people use stop losses like dickheads, and they just put a stop loss because they don't want to lose money. I put stop loss because there's a shift in market structure. That's where I put my stop losses, right? And only when they close in those areas. So that's how I trade. Again, you can experiment with both styles, but because you have people who will tell you completely opposite of what I just told you, who who are successful traders just like me. You have to. This is why it's important to keep the journal, and you have to experiment. You have to take 100 trades this way, 100 trades that way, and then you make micro adjustments and sooner or later, within a year, you develop your system and your style where it reflects what you can, what's palpable to your psychology, because we all have different psychology, and you fighting against shit is going to be detrimental versus you accommodating, understanding yourself, understanding your handicaps, your strengths and weaknesses. You kind of minimize the weaknesses and double down on the strength, right? And that takes time for you to find out what you're good at. Are you good at holding trades for a long time? If you have that, and you're okay just being you hold trades 1 to 5, 1 to 10 with some kind of normal stop loss, and you're okay holding it for 2 weeks or 5 days or whatever, then more power to you. So I prefer to be, I'm like a hybrid scalper, which is to say I use 1 hour time frame to scalp for the day, because 1 hour time frame tells me better story than a 5-minute chart would, or 1 minute. I know how to read 1 hour chart. I know how to read 4 hour chart. It's a much it's higher quality, less noise. So, but I don't need to stay for this whole move. I can be in and out, 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 right? So, all right. What is your BRICS? What is your saying on BRICS currency? Is someone going to make the dollar lose value of BRICS currency with the next big thing in the best dollar? All right. Well, BRICS is obviously a complicated question. The U.S. dollar is still the big dog. We've had switches before where the previous big dog was UK. Now it's a rotten fucking hellhole, to say the least. So is U.S. on the same path? We don't know. Well, it looks that way, right? That China is obviously going to be the next big thing. So that's why you have Trump and China and Russia and all those things happening geopolitically. So with BRICS, the problem with BRICS is nobody in the Western world. U.S. still has a tremendous influence. Most of oil is still traded in U.S. dollars. That's why Gaddafi was killed. That's why Hussein was killed. All those leaders in the Middle East, they wanted to trade oil not in U.S. dollars. I said, no fucking way, Jack. Bam, right? Gaddafi was in power for 40 fucking years. All of a sudden, why did they decide to take him out in 2015? When was it? Why? Because he wanted to start trading oil in gold dinars, not in U.S. dollars. And we said, okay, Jack. And now it's a fucking, it's a parking lot. I'm losing continuously. Properly taking trades based on strategies still will get lose. I don't know what's happening all of them. We're going to funded account. Could you please help me stand? Your advice means a lot. Yes. Stop trading with the funded account. Go back to demo. Then get a $100 account or $500, $1,000 account, and rework your system, because clearly your system doesn't work, and you're still in a phase where you are. You don't have a system. You're gambling, and you thought you have a system, but you clearly are not handling the stress well. Maybe your system works, but because it's live, your emotional responses are happening, and you are losing money because you can't hold you to your winners. You hold losers for too long instead of cutting them off and you're moving on. And it's very important. The reason for stop loss is very simple, because you have mental bandwidth, and it runs out at certain point. Okay, that's why it's important to cut the losers, because when you have losers on your books, most of your brain is preoccupied. Oh fuck! Oh fuck! Oh fuck! Oh fuck! It doesn't look at the opportunities anymore. Once you cut the loser, it's like a weight off your shoulders, and you're like, okay, fine. Now I can concentrate on the positives. All right. Stan, most traders focus on entries during NFP, but as funded trader, the real risk is losing the account. If you want piece of advice to help a trader protect capital for during news, don't fucking trade the news. You don't need to trade the news. You can trade after the news, the reaction after post news, and then that's the whole point, because most professionals don't hold through the news. You cannot compete against the Wall Street algo. They get a nanosecond release pipe through APIs right into their, computers, right? By the time you see NFP number that it was 22,000, and the algo already saw it fucking 30 seconds ago. By the time you fucking see it, right? And that's why they already traded it and they already got out by the time you, what happened, right? So you cannot compete with that. That's not your edge. My edge is to wait for the dust to settle, for all the morons. Basically, imagine 100 people punching the shit out of each other, right? There's a few standing after hours of beating the fuck out of each other, and then I woke, fresh from a nice 8-hour sleep, and I just fucking slap them all around, and and I win. That's what I want. I want everybody dukes it out in the price action, right? Does all the up, down, sideways, whatever the fuck that happens. And then once all of them are out of breath and their bodies everywhere, put it in those terms, you have these pullbacks that then you're like, I come in, oh, this is an easy fruit to pluck from the tree, and I eat it, when it's ripe. And then I make the money without all the hassle. So most professional traders don't have to be trading news, and most of them, because you don't have an edge. Some people, again, Wall Street pays an exorbitant amount of money to get nanosecond data first before you get it. All right, so there's services like that. So why are you competing against the nanosecond bots? You can't. It's stupid. It's a fool's errand. So if you're not gonna have a long-term career in this business, gambling, because sometimes, oh wow, I was right. It ran 100 pips immediately in 1 second. And you can make a lot of money, but is that system repeatable? Will you be able to do the same thing over and over again? Probably not. So that's why, like I said, Fridays usually don't trade during big news releases unless you have years of experience under your belt. It's just easier that way. And the problem stems from you not having patience. You thinking that, okay, it's Friday, or whatever, it's another day in the market. I need to work. I need to do something. And so you get into subpar trades because of your need, because your mommy told you when you were little that you need to work hard. All right. No, you don't. You need to stay the fuck away most of the time. It's a reduction process, not addition process. You need to reduce the amount of shit you do in order for you to become successful. All right? Like, how do you lose weight? Through reduction, not addition. Right? You reduce, you don't even have to go to the gym. Just reduce the amount of shit you eat. Eat clean food, simple food, no processed food. Remove all that sugar, garbage, blah, blah, blah. You'll lose weight. You don't even need to go to the gym. You can sit on your fucking couch. Right? So same thing with trading. The less you do, the better. And most traders, because they don't know anything, they do a whole lot of everything. And I was like that too. I tell the story all the time. My first job, one of the first jobs, my boss would take 3 to 5 trades a week. I would take that amount in a day. I would take 5-10 trades a day. Right? But at the end of the week, percentage-wise, obviously he was trading a much bigger account than I. He would be winning, and I would just 80% of my trades were, half of them were plus, half of them were minus, and there were a few big outstanding outliers from both directions. So, in the sum of all things, you did a whole lot of things to generate very little, when all you had to do is just remove the stupid shit, do the right shit, and just pluck the A plus setups, and you'll be okay. You'll be successful. All right. I don't want to say guaranteed, but I can pretty much, I don't know when, but we're going to retest this 3,500 level, the previous all-time high. I can guarantee that. Not today, maybe next week, but I'll be ready. So let the price do, or this is the new high as well. If the price runs away like this, 1 second. So this is gold chart, right? I can guarantee you that we will retest this at some point, because you have way too. This is a very impulsive move, and all moves get corrected at some point. So whether I will start catching this trade at this level, obviously you're gonna have to fib this, like so, or if you want to do short term, and we kind of like we still keep on climbing, and then we keep on climbing. Then we do one of these with a nice reversal candle, and then we start climbing it back up. So I'll do this, but I'm not gonna chase it here, because you're banging against the wall, and you don't know if it's gonna keep on going or not. It's just stupid, you're at all-time highs. So how many people just bought? Oops. How many people do you think bought the breakout because they're breakout traders, and now they're kind of it's starting to smell a little, right? Because your position is here, and now you're 10 points lower. I'm just saying, right? So not to be in these positions, I take trades that are again, I have a plan, and I take the same plan over and over and over again. I don't ascertain every single time, was it going to go up, or is it going to go down? Is it going to go up, or is it going to go down? I do the same repetitive algorithmically, like I'm literally a human algorithm, just do the same shit with my own discretion. That's it. How do you make peace? You make peace with the losing trades. How do you think about trade that you have taken was right or wrong? Could it be simplified so it doesn't feel like stuck in the endless loop? All right. You don't have confidence in your system. Again, it all relies to you retracing back. You need to go back to the university. Okay, so for the next month, you're gonna take 100 trades, or however you can take in 1 month, whatever your system is. You don't care about each individual trade, but you only care about the series. And after 100 trades, if you're profitable, you're profitable. If you're not profitable, you need to make adjustments. And you restart the whole process one more time, until you spend the fucking 6 months to a year to 2 years perfecting this. And once you have the system where out of 100 trades, you make, you're profitable overall, that's when you stop caring about each individual trade. You don't give a shit. You don't marry it. It's just another test try. You throw a ball like this, or like that, or like that. All right, and find out which one is the fastest way of throwing the fucking ball. You don't give a shit that this way didn't work. You actually, okay, so this way didn't work, so I gotta try this way, and then this way, and then this way, and then this way, until you find the magic key that opens the door. And that's how you start throwing the fucking ball. That's all it is. But you didn't spend enough time. You didn't do the homework. So now you're literally sitting at the screen, and you have funded accounts, and you're like, should I buy or should I sell? Should I buy? You have zero confidence, and that's why you're sweating bullets, and you're at the mercy of willy-nilly lady luck, And if you get lucky streaks, you make some money, and most likely than not, that's why you even if you get a payout one or something like that, it was most likely luck and nothing else. And we see it in the back end with a lot of users. There's a lot of users that get one payout, and then they lose their account because they celebrate too soon. There's myriad of reasons, right? Some of them just they simply got lucky. That's it, What is the biggest danger of chasing returns, and how do you keep my strategy consistent? The biggest danger of chasing returns. I think again, it all comes down to. You want to win this game, obviously. But you have to. Market humbles everybody. And I've been beaten so many times by the market. It's an undisputed winner, heavyweight champion in the world. Not only me, but every single professional trader. So I don't chase anything. I adhere to a plan, and you have to develop the plan. Like I said, 100 trades. Next month you're in the university, and then you take these little micro step trades, right? And if this whole series is profitable, that's what you care about. You don't give a shit if this trade number 2 was a loser or a winner, or chase number 5 or 74, right? They become irrelevant. So that's why you just take them and you forget them, because your job is to remember that you're in a series of trades and you only care about the series, okay? And the series either is profitable or not profitable, and you make adjustments. When it's not profitable or profitable, you still make adjustments, whatever. And that's it, until you consistently can reproduce results. And once you can consistently reproduce results, only then you should get the funded account, all right? Yes. Does Funding Traders offer a path for funding trade? Yes, absolutely. We want talent, because I can, if you're a talented person, you don't have the capital, I can copy 5x your trade. So if you're trading a 100K account, I can put a $500,000 account behind you. So if you make 20K, I make 100,000. That's where you can keep your 100%, and I can keep my 100%. So the more of this type of traders we find, that's the name of the game of a prop firm, okay? But it's very hard, because a lot of people, they one-hit wonders. So that's why you have most of the traders on the demo stage, and we start booking after you show some consistency. Because I'm not going to copy you just because you got funded. That might have been luck. That would be stupid of me to 10x copy you, and then you lose 20 grand on a funded account, I lose 100 grand, right? That would be stupid. So I need to have my own risk management as a company in place. All right. If you could give one piece of advice to a trader with a 25, what would it be to maximize his profits? Trade selection. You have to trade select A setups. Stop selecting subpar because you need to pay rent. Markets don't give a shit. You only take A. All right, not the little shits in between. And most people overtrade, and because obviously you specifically mentioned that it's a 25K account, pro account, right? So obviously it's not a 100K account or a 500K account. So it's not a big account, but you still want to make money, and you're trying to juice out whatever you need to juice, to juice it out, and that's not how this works. You can't force markets into giving you money or to do anything. You only, when again repeatable cycles happen, you take those A setups, and that's why most traders overtrade, and they don't have the patience to just take good shit. All right. Well, happy birthday, bro. All right. So a lot of guys who I've interviewed after they get funded about risk management, a lot of people are bitching and moaning like little kids. Risk management and risk team is there. It's like your parents who told you when you were a little kid to brush your teeth. What was your initial reaction? I don't wanna do it. Right? Now, hopefully, you're not fucking animals. Some of you are. You brush your teeth daily, right? Yeah, because your parents taught you that habit. So same thing here, risk management. Most of the time people are risking way too much, 5%, 10%. Then they get 3-4 losers in a row, and they're fucked. Oops, shit. Close the wrong window. 1 second, boys. one sec. One sec. Press the wrong button. What the fuck was it? There we go. All right. We're back. So, how was the question? What was the question? Let's see. So yeah, so most people, I don't. Why is it 2%? Why is it 1%? Why is this and that? Because you need to brush your teeth. That's why. Because when you're trading $1 million account and you're gonna be risking 10%, you're down. You have 3 losers in a row, which happens all the time. It happens to me. You know, at the beginning of August, I had 4 losers. Last week actually, I had 4 losers, and then in 2 winners, I made up everything. Right, but 4 losers in a row. If my risk management wasn't on point, I would have been down for, let's say I was risking 10% on each. I would have been down 40%. And that's a big motherfucker, you know, to come back from. So, makes you get stepped out a little until you hit the series of trades that are winners. That's it. Thank you. I don't like the blow smoke up my ass thing. So I don't like compliments and all this shit. I don't give a shit about that. So thank you all. I love it. You know, I appreciate your support and all that shit. But I don't give a shit. In a good sense, I appreciate it a lot. It just I don't need flattery. I earn my own flattery through hard work, right? That's why I bitch about the accounts. There's that free shit. I have higher standards for myself, so I don't need somebody to tell me, oh, you look this or you look, blah 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 blah. No, I demand that from myself, and you should demand more from yourself as well. Yourselves. All right. All right. Do you believe consistency comes from strict discipline with one system or from adapting your approach as market conditions evolve? Well, markets, you have to evolve. Your consistency comes, it's your system. But again, it in various contexts. So my system is going to do very well in a non-trending market. I just need to be nimble. I need to understand which, for example, you're going to behave differently if you're in the daytime or nighttime, for example. Like if you're doing some kind of, let's say you're playing sports and it's dark outside, you're not going to do the same type of, and you're playing football. Because you can't see, you're in the dark, you're going to play completely different, even if you can see a little bit, right? Not super light, not stadium lights, but just a little bit, right? It's not the same as in the daytime. Same thing here. You need to understand which environment you're in and dance accordingly. Because when you're in a trending environment, you do this. When you're in a consolidation, you do that. And the system can perform. There's no system that will do well in all 3 scenarios. Trend, consolidation, reversal. It will do great in one of the aspects, but not in all 3. It can be profitable in all 3, but one will stand out better than the other. Okay, you just need to understand which environment you're in, position correctly on the macro flow, and that's it. I prefer trending markets, so I see gold fucking running. I wasn't a big gold trader 5 years ago. I couldn't give a shit about gold because gold was what? It was doing nothing. It was a lot of chop. Very slow, blah, 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 blah. Well, it's Nasdaq, sorry. So, let's take a look at gold. See? So gold for 5 years was doing, or 4 years, 2 years, whatever. I don't know why this stupid fucking chart. See, gold was doing nothing special. It was very, nothing, right? It's been this sideways consolidation since 2020, blah, 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 blah. Until it started running, and then when it started running, it started to run, right? And that's when it was, I hopped on it. I wasn't trading gold. What I was trading before gold? I was trading dollar, because the dollar was moving. See? while gold was dicking around, the U.S. Inflation went high, and Federal Reserve started raising interest rates. So the dollar started going up because of inflation and higher interest rates versus other currencies, which were still on zero, on ZERP, zero interest rates. So against euro, pound, Aussie, whatever. So this was the trending market. When it started doing this shit, I touch dollar, but rarely. Gold is easier now. So, and then the time of gold will come to an end. So I'll swap to something else. I don't want to be in this choppy shit. I want fast, decisive moves that align with fundamentals, and I use my technical skills to be aligned with the fundamentals to enter into the direction of that trend. That's it. That's all I do. All right. We did like more than an hour, I think. Let me see. I don't know when we started. I never started. Yeah, about an hour, more than an hour. All right. If a trader keeps following their plan but still faces long losing streaks, should they stay patient and start questioning soon? The question is about, if your system, if it's not working, it's not working. But you can see which aspects of it are working, and if you keep the journal, you will be able to see statistics of where you need to make the adjustments, of what you should do less of and what you should do more of. But you need data for it. You need to record your trades. You need to record before and after, and see if what you expected to happen really happened or the opposite happened. If the picture is the opposite, then obviously you need to make adjustments and see how would you win in that scenario. What adjustments should I make so I'll be a winner in all these scenarios? And that's how you tweak your system over time to be nice. All right. All right, we got market open in 4 minutes. Why do you think most traders blow accounts even though they already know basic rules like using stop losses? Because they're responding. They're not thinking with their logical centers of their brains. They're thinking with lizard brain, through fight or flight emotional states. And even though, so for example, you're a fat fuck. There's candy on a fucking table. You know you shouldn't eat it because you're fat, right? But you still fucking eat it because you want it. The emotions are, it's gonna be tasty, right? So who wins? Your discipline, your logic, or your emotion? Emotion trumps everything most of the time. So you need to understand how, when emotion subsides, how to proceed despite of it. Even if that fucking candy bar is laying there, you need to, how do you control yourself not to eat that fucking candy bar? Some people just don't have candy bars in their fucking house. They say, fuck that shit. I don't want to have, if you're an alcoholic, don't have vodka in your house. If you're a fat fuck, don't have fucking candies in your house. Just, it's easier that way. You don't need to, it's not in your fucking eyes. So same thing here. I mean, with markets, how do I not FOMO in? They blow accounts because they don't take stop losses. That's why they blow accounts. They they think that they got to the funded stage, that or they were making money, that now they figured it out. The market humbles everybody real fast. So that's why I don't chase. I don't emotionally respond to things. It was just beaten out of me by markets until it's very simple. It's like if you're a fat fuck and you eat candy bars that are on your table, at some point you're going to be like, okay, enough is enough, right? I had my enough is enough moment where I was like, okay, this clearly doesn't work, because I had a journal and that says, okay, this type of trading usually causes you to lose. So are you fucking retarded? And your brain kind of like, no, I'm not retarded, so I'm not gonna take these type of trades anymore. And that's why I'm okay with being on the sidelines, because sidelines are better than being in a loss right now. Because now, we're here now, talking and doing all this shit. I'm not under stress. I don't have any positions on anymore. I have stock positions, but like day trades. I took my profits. I'm already in profit, so I already won for the whole week. I took five trades, all winners, I made my money. I don't give a shit. Some idiots who chased into some positions or got caught up, now their for Friday is ruined. Their weekend is ruined because now all of Saturday and Sunday when the markets are closed, they're gonna be fucking sweating ass and being oh fuck. Are we gonna get up or gonna get down in the open? And am I gonna blow the account or not? And now you ruined all 3 days for you. So don't trade Fridays. Is the point. But yeah, I went through these. How do I know that? Because I was the fucking retard at some point, and that's what happened, right? So I just know it. I know it myself, and I don't want to repeat that stupid behavior. It's like how many times are you gonna put your hand on the stove until you're like, okay, this burns my fucking hand. Stop putting on my hand on this hot stove, and that's how you learn. You do it enough times where you burn yourself so many times, you're like, okay, this clearly is not the way to, do it, right? So that's how you learn. If a trader keeps following their plan but still faces losing streaks, should they stay patient? Yeah. We talked about it. Yeah. Okay. Let's. Do you believe consistency comes from streak? Yeah, we're talking. If a trader has 50% win rate, what's the losers? What do you think they are missing? Well, they definitely are. You think profit makes well, you clearly don't have a 50-50 win rate and 1 to 2 R&R, and you're in a losing position because clearly your 1 to 2 is not reaching the 2. So why don't you switch to 1 to 1 and see if you can get to 60% accuracy? That's it. You'll make money. Do you think traders fail more because of lack of patience to wait for good setups or because poor execution? Execution is stupidly easy. You can program any algo to execute whatever the fuck you need to execute. We got stock market open. That's why you're seeing this reaction right now. Again, sweep the highs, stop out the idiots, sweep the lows, stop out the idiots, who are trading on a 1 minute chart. The bulls got stepped out, the bears got stepped out, and now we're gonna see the real moves. See? It's like clockwork. You just have to understand where you are on the map of things, and that's when you're gonna make money. So, yes, most traders fail. Oh shit, it wasn't showing me. Yeah, see, this is the reaction of. This is Nasdaq. This is the cash market open. We go down. We step out the people who are. We go down we step out people who are long, right? They're long. So we get this wick. This action takes out idiots who are long. This action afterwards takes out people who are short. All right, and now you get the real move. It's like clockwork. It's the same repetitive behavior over and over and over again. All right. It's a good sign that it's trying to close every candle. It's closing above. That means we might have some kind of sideways consolidation before another leg up. So we might have to jump in on longs at the highs, but a little bit of pullback here would be ideal. This would be a super nice setup right here now, like that. All right, with a stop loss here, or here if you like tight stop losses. All right, last question. Okay, we're good. So patience is the key, and that's the only way to make money in trading. You have to be disciplined and wait for your setups. Most of you don't have setups. That's why you just kind of like, okay, am I going to be buying today? I'm going to be selling today. What am I going to be doing today? You have no fucking idea. You're just kind of guessing based on some, bullshit in your head. Right? And you cannot just guess, because sometimes you guess correctly, sometimes you're just at the mercy of random shit. You have to have repeatable patterns that you can take advantage of. And to find those repeatable patterns, you have to first suck a lot. You make only losers. You see the biggest offenders. You remove that. Slowly, you become a break-even trader. And slowly, you tweak more to become a winning trader. And that takes a year to 2 years. Some people take 10 years, but whatever. But if you stick with it, you will get to the promised land, all right? just tenacity, discipline, and yeah, I know it's hard for young people to be patient. I was young too. I was not a patient person. I'm still not a patient person, but with markets, I became patient because, like I said, markets are very humbling. They have a very humbling technique by smacking you with a stick over the head until you learn better, right? So, all right, let's see. All right, so I might be interested in getting somewhere long here on NAS, and same thing with gold here. Gold, I would be interested in getting, oops. So something like this would be my trade. So I have to wait. Here's your 1-to-1 with the stop loss. So even if you take out these lows and these lows, I'm still protected, all right? And at the worst case, it will come back to my break even, and I'll close the trade out and break even if worst comes to worst, okay? Because it was a deep enough pullback. And whatever, let's measure it for shits and giggles. Oh, looky here. Which zone is this in? Oh, my favorite zone. Ooh, how do you know? See? Just like fucking clockwork. Same shit. Same pattern. Same shit. If it happens, it happens. It doesn't happen, it doesn't happen. It's okay. All right, boys and girls. Okay, some interesting question. Last one. Is it better to start trading indices after New York session open at 8 a.m. or after opening bell at 9:30? Okay, thank you. So no, so indices, it's better. You're better off trading at 7 a.m. to about 8:15, 20 prior, because 8:30 usually have news releases. So from 7 to 8:30, then from 9:35 to 11 is my kind of sweet spot. Okay. All right, boys and girls. I wish you all a happy, enjoyable, pleasant weekend. I will see you all on Monday, 9 a.m. Hope you don't do anything stupid. Be patient, be disciplined, and you'll get to the promised land, as I always say. All right. So enjoy your weekend. Enjoy the rest of the Friday. Get into some trades only if you see A+ setups. As you can see, you have the pullbacks are gonna come. All right. So don't chase. People who chase end up in a hospital, right? So you want to be on the beach, sipping margaritas, not in a hospital with a broken head because you were chasing a bus on the street, right? So don't chase, and be patient. Be patient for the next bus to come, because the buses are coming, all right? And or the trains, whatever the analogy you prefer. All right, boys and girls, I got shit to do. Hope this was educational, helpful, and all that jazz. I will see you all